Welcome back to Startup Street. Pine Labs recently secured the first set of approvals from the National Company Law Tribunal to merge its Singapore-based parent entity with the India unit. On the sidelines of the Global FinTech Festival last week, my colleague Ritu Singh caught up with Pine Labs CEO Amrish Rao to ask him about how much closer this startup is to its goal of becoming an Indian-registered business and how long before the company hits the Lal Street. Take a look at the conversation.
So we understand now, the NCLT has admitted the application for a merger between Pine Labs India and Singapore. Tell us, what are the next steps in terms of this reverse flipping that you're looking at? How long will the process take and how much money are you going to have to shell out?
Yeah. Look, let me address the part around the NCLT process. So NCLT process you would typically think is into 3 stages. We've completed the first stage where they, as you rightly put it, they have admitted it. But now there are some regulatory steps that we have to complete. So we are quite excited with how this is moving. And hopefully before the end of the year, the NCLT process should be behind us.
So that is the NCLT process. What are the next steps before you actually shift your domicile back?
So I guess once the NCLT process is completed, then moving and becoming an India entity, a process would have been completed. As regards to your last question associated to the tax involved in that, I'm not the best guy to answer this. I'm not going to take that one.
The cost rather, because PhonePe had to shell out close to $1 billion. Razorpay is in the process of doing $250–300 million sort of estimates. So I'm wondering how much is it going to cost the company? I'm
not ready to second guess it at this point of time. So
okay.
On some other day.
Give us a sense of where the timelines are from the last time we spoke. You said, it's only when the company hits profitability, you're able to show sustained business momentum for a while, that you look at, the Lal Street. So how far away are you from there?
Look, we've created a very strong business. We've got almost 1.2 million merchants that we connect with. We've got about 50 million consumers which touch us at some point of time in every year. We have a fairly diversified business which is also going global at this point in time. By all means, I think we are ready to be a company which can trade on public markets, and this is a company which we will be very proud not just to take it to the Indian consumer, but also take our products to global markets.
Okay.
So from all standpoints, I do think we are ready to be a public market company. Having said that, as any smart person would tell you, there are many steps involved before you truly become a public listed company. I've had an exit before in my earlier part of my life, and I keep saying that to have an exit and a sale of a company, the stars have to line up. Similarly, the stars have to line up before an IPO happens. I don't know how long that would take.
So, what are these stars that will have to line up? Profitability, of course, is one factor, but are there specific milestones you want to hit, before you consider this IPO?
See, I think profitability is something which is extremely important to us. We've been building up the company the right way. If you look at the profitability on the core businesses that we work in, we've been EBITDA positive, I would say, for the last 5 to 7 years' time. However, what we've been doing is we've been continuing to invest into the business. We've also been investing into infrastructure building for a long period of time. But going forward, I do see ourselves turning into a profitable at a PAT level, FY25, FY26 and going forward.
Okay.
So we do think that we would be completely ready from a financial standpoint. When it comes to product, business, availability to our client base, I think we are positioned extremely well.
If you could give us a split of, what are the fastest growing legs? How much of revenue is coming from which segments?
Today, I would say about 40 to 45% of my revenues comes out of what we do for offline small merchants when it comes to our POS terminal.
Yeah.
But more than 50% of my revenues comes out of online services, comes out of capabilities to hold money and also move money. That famous story about a coffee company in the US which holds almost about $2–2.5 billion of their consumers' money in their account under a prepaid card. That's the kind of service that we provide to our partner institutions.
I'm not sure regulators will be happy to hear that, though.
Fully regulated. So that's the part which we do really well. One of the things that I feel proud about is that we work very closely with the Reserve Bank of India. I think one very good thing about the Reserve Bank of India is they've been very clear and they have been very consistent in their approach. And honestly, we've just followed that, and hence our relationship with the Reserve Bank of India, I would say, is on a good stead.
Well, the other big buzzword around here has been the unified lending interface. From a distributor point of view, how does this change the game for players like you?
So look, one of the areas that we have not gone into is on the lending. So we truly believe ourselves to be a thin balance sheet, a low capex, a technology first company. We don't see ourselves as a lending company. We would be more than happy to process lending transactions
in a distribution
on our platform.
model.
No, not even distribution. I generally don't like to distribute credit.
Okay.
What we would want to do is, if there is a credit transaction like a payment transaction running on our technology infrastructure, we will more than happily process that. But today, credit-related revenues in our financials is almost zero right now.
Well, let me finally ask you, you've been a big believer in M&A, that's inorganic has been a big strategy for growth. I'm wondering if, there are white spaces you want to enter into, if not lending, and if there are any acquisitions, further acquisitions we'll hear of from Pine Labs.
See, I do believe what UPI and real-time payments is doing in the market is just unique, and it is going to fasten the adoption of digital payments with the Indian consumer. Today, we don't have a consumer-facing product. At some point in time, we would want to have a consumer-facing product, and if an opportunity comes along in that area, we would be very keen to do that.
What would this consumer-facing product would be like?
As I said, something where the consumer keeps in their pocket to do a payment transaction is an ideal explanation of an...
Like a wallet?
I wouldn't call it as a wallet. I would just call it as a payment instrument. So it could still be using UPI to make a payment transaction.